Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to yet another promising edition on the X Speed Live. And in fact, we have quite an interesting trading setup gradually unfolding on the chart, and I'm so eager to share these insightful ideas with you as we get ready for the New York session. Now, before we begin, let's quickly confirm that we are good to go this morning. That is, if you can see my screen, and you can hear me loud and clear, please confirm this positive in the comment section by typing in I in the comment section. So I really want to see some feedback so that I know that we are all good to go this morning. So let me see some feedback, please, while I try to load up my comment box, and then let's dive right into the business. Okay, so I can see a handful of comments here. All right, thank you very much. 2660, good morning. So I can see 260 just spam the box with his hi. All right, okay, so we have 424. We have Francisco 56. Good morning to you, Francisco. Skyburn, how are you doing this morning? Hello, Carrie. How are you doing? Happy Friday to you too as well. 655. Good morning. Thank you, Carrie. Thank you, everyone. So I'll take this as a positive confirmation that you can hear me loud and clear and you can see my screen without any freezing. And it's on this note, I welcome you once again to yet another promising edition on the X Speed Live. My own name is Sharif Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you through the current market structure, looking at things from a technical standpoint using simple parameters such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement of these assets on our watch list. Well, the last 24 hours has been quite interesting. In fact, this morning we've begun to see that the US dollar struggles to find demand after registering losses against its major rivals on Thursday. Well, we are going to be looking at that and how to capitalize on any potential trading opportunity. And remember that today is Friday, which is the last trading day of the week. And this day is peculiar with profit-taking activities, as majority of the participants in the market who had significant positions during the course of the week are likely going to be closing in on some of their positions ahead of the weekend. And of course, this would reflect on the chart as price moving in the opposite direction of the prior leading price action. So we are going to be taking this psychological expectation into consideration while we review the current market structure. Now, with that being said here, let's dive right into the business. And as usual, the first thing we normally do, as you all know, is to check on the economic calendar, as these fundamental factors often manifest on the charts in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information that can make us position ourselves in such a way that we can capitalize on any potential move prior, during, and even after the event. Now, going into the economic calendar here and focusing on Friday, September 29th, we have a couple of high impact events from the US economic docket, and this is the core personal consumption expenditure. Now, for those who don't know what this is and how important it is for us to use it as a parameter to guide our trading decision, this index measures inflation by excluding volatile food and energy prices, offering insight into the overall price trend. And its impacts, a rising core PCE may lead to expectations of tighter monetary policy, bolstering the currency, and of course, a lower reading might indicate looser policy and weaken the currency. So if we look at the previous data here, it came in at 0.2 for the month and 4.2% for the year on year. Now, the expectations here are quite mixed, as you will see that for the month, economists are expecting a 0.2%, just like the previous month, and a 3.9% below the previous month for the year on year. So we are going to be looking forward to what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond expectations? And of course, we know that the slight anticipation of this event itself could have a major influence in price action. Now, talking about price action, let's move right into the business for today. And the first instrument we are going to be looking at this morning is going to be the US oil spot. Now, it's quite interesting that on the US oil spot, we've had considerable amount of profit on this asset as we took advantage. This week was more of a roller coasters of sell, buy, and at the second half of the week, we also saw selling positions. And in fact, I would like us to run through how the week started for us on the US oil spot and what led to the idea of our initial sell, and then what gave us the confidence to be part of the uptrend situation that happened during the course of the midweek. Now, so at the beginning of the week here, the first thing we saw on the US oil spot, so I would like to zoom this in a little bit so we can see things more clearly. So at the beginning of the week, it was quite clear that the market was indecisive as we saw price action confined within the $90.10 level and the $89.60 area to give us an insight into the level of uncertainty at the beginning of the week. And you know how we do it in this community. Whenever price action falls into this kind of range, that is giving us a flat channel, we normally exercise patience, waiting for a signal in the form of a breakout retest of the resistance line to give us an opportunity to buy, or the breakdown retest of the support line of that range to give us an opportunity to sell. And interestingly, we had the privilege of capitalizing on the sell position as we sold at the breakdown retest of the $89.60 level to welcome our first sell position for the week. And in fact, we went on to capitalize on this bearish move by adding more positions at the projected levels, at the $89.30 level, the $88.95, and of course, the $88.50 area, giving us the privilege to maximize that bearish momentum before the bullish wave began. And one of the things we did on Tuesday was to use this descending trend line, which is highlighted on your screen with the red color, has our yardstick for the second half of the week, as you will see here. And one of our agreements here is that as long as price remains below that trend line, we shall continue to look out for opportunities to sell, and we are not going to be buying unless a breakout retest of that trend line happens. And we saw what happened here right here on Tuesday. A couple of hours into the New York session, we saw price breakout, retest both the trend line and the $88.95 level to welcome buy positions, hereby giving us the privilege of maximizing this potential move as we had entries at the $89.30. As you will see here, we had about 6 positions on the buy move, $89.60 area. We had the $90 level broken out. We added more positions, had the $90.80. We went on to ride the move all the way into the breakout of the $91.50 level. And as a result of this, we were able to capitalize over 1,500 pips in profit on the US oil spot before the bearish momentum began yesterday. It has been quite a very interesting week for us here on the US All Sport. And I feel yesterday we missed out on this live session as I was unable to make up with you guys. And I do hope you are able to capitalize on that bearish momentum as soon as price broke down that ascending trend line we identified a couple of days ago. Now, if you remember vividly, I made mention that this ascending trend line, if it gets broken and retested to the downside at any point in time, then it will be a very beautiful opportunity to sell. And if you had sold, we saw how price moved about 100 pips on that one before the buy pressure resumed. And if you had moved your stop losses accordingly, you would either still be in the trade with a small profit size, or you must have been taken out at a worst case scenario of break even. So well done to everyone who has been part of this profitable journey, and I'm so excited that you are able to capitalize on these moves. Now, with the current situation we have right now in this market, what is going to be our plans as we get prepared for the New York session? How are we going to continue selling as we've seen this bearish momentum in the last 24 hours? Will this incite more selling opportunities, or are we going to be witnessing the culmination of that retracement phase in anticipation of another wave of bullish momentum? Now, before we go into the details on the 1 hour time frame, I would like us to ride through the higher time frame to see things from an holistic standpoint before we can make a well-informed decisions. Now, to do this, we shall be scaling up into the 4 hours time frame, where, if you remember, at the beginning of the week, we acknowledged that the momentum in this market has been more of a bullish trend. As we saw here, since the month of August, we had higher highs and higher lows, giving us a beautiful ascending channel that we were using to guide our trading decisions for the week. Now we have the support line of the ascending channel, then we also have the resistance line of the ascending channel. Now, if we extend the support line a little bit further to the outside, you will see that price action climbed back above that support line on Thursday, despite the breakdown of that support line here. On Monday, we saw price climb up, which further emphasized the strength of the buyers here. And right now, price is back into that zone around the support line of that ascending channel. Now, with the situation we have here, and for me to consider trading this asset today, I would want to see, because of the continuous buy pressure around the $90.50 zone, that is this area, as you will see that 1, 2, 3, 4, 5 in the last 20 hours, you'll see our sellers have struggled to break through that zone. And for me, this could be a red flag that buyers may likely be pushing price to the upside one more time. And I would like to buy anywhere above the $91.50 level, breakout retest of that structure to join the uptrend move. So for me to buy the US All Spot for today, I would rather want to see a breakout retest of the $91.50 level right on my lower time frame for me to join a bullish move here. Now, in as much as we're looking out for buying opportunity, we cannot ignore the potentials of the sellers at this point in time. Remember, at the beginning of the week, the sellers were successful enough to break down this ascending trend line, which happens to be the support line of that ascending channel. Of course, we saw the breakdown here on Monday morning, as you will see here. And of course, price climbed back above that structure. Now we have price trading below that ascending trend line here in the last 24 hours. And because of this situation, and because of the fact that price still remains below that support line, it is reasonable that we also consider the potentials of the sellers. So if instead price does not break out of the $91.50 level, and instead it takes out all the buy positions along the $90.50 area. Remember, this was the zone I spotted here that I said in the last 24 hours sellers have been struggling to break through that area. Now, the only condition that will make me want to be selling the US All Spot today is for price to take out all the buy positions within that zone, retest of structure confirming the liquidity that sellers have in the market to incite more selling opportunities. Now, we are not buy selling unless the breakdown of the $90.50 level happens. Now, I would like to scale back down into the 1 hour time frame so that we can look at the structure and see how we can actively position ourselves in such a way that we don't miss out on any trading opportunity here for today. Now, scaling down into the 1 hour time frame, this is what I was able to spot here this morning. Now we have the $91.50 level duly marked out here. Let me bring this in a little bit so we can see things clearly. And of course, you will see here, following this impulsive move to the downside, we can see that we have a structure here that looks more like a reversal pattern. We could call it a double bottom structure, but if we go as far as what happened in the early hours of today, it could turn out to be a triple bottom structure. But the fact here is that sellers are finding it difficult to break through the $90.50 zone, giving us buying pressure and leading to some engulfing candle around this area. And this is a sign that buyers are gradually gaining momentum here. Now, what I will be doing here is to acknowledge the zone as a temporary demand zone, at least in the meantime. So let's mark this zone out here, and then we label it the $90.50 zone. So hold on a second, let's do this labeling. $90.50 level. All right, so we place this right inside the box and give it a whiter color. And here we go. So we have a demand zone right here. So I'll call it a temporary demand zone in the meantime, while I look out for more opportunities to buy if price action breaks out, retest the $91.50 level, then we can join that uptrend move. And remember that we have multiple levels here, like the $93 area, where we can maximize the potential of this bullish move if price action goes on to break out of that structure. Then we also have the $93.50 level here, which is the highest point price action has been for this year. A further breakout of that level too will be welcoming more buying opportunity. So let's keep ourselves posted and let's capitalize on these opportunities. Now, there are two ways to which we normally take advantage of breakout of structures in this community. The first one is for those who are already profitable in this asset. That is, if you have been part of this profitable journey since the beginning of the week, then there is a comfort in just placing a buy stop order above the $91.50 area to capitalize on that move, as we will be leveraging on the profit we have made so far this week. And if it doesn't work, we will know that we are only risking some of the profit we had made so far this week. However, if you are joining us for the first time, then I will be suggesting that you wait for the breakout and then confirmations, which would reflect on the chart as a retest of structure, where sellers are finding it difficult to stay below the $91.50 level. Then we can join that bullish move to the upside. So this is how we are going to be marking out our levels for buying opportunities here on the US All Spot. However, if price drops to the downside and takes out all the buy positions around the $90.50 zone, then this will be a beautiful signal that sellers might likely be dictating the pace for the rest of today's trading session. So to sell the US All Spot today, we want to see price take out all the buy position along the $90.50 level, break down of that structure, retest for confirmation, then we can join that decline to the downside. So that is how we are going to be selling the US All Spot today. So it's a simple setup we have here. All you just need to do is mark out those levels, the $91.50 level for buying opportunities, and of course the $90.50 zone for selling opportunities if price action does break down that structure. So our center of focus for today is basically between the $91.50 and the $90.50 area. So mark these levels out, as you will be needing them as a reference point to guide your independent trading decisions. So if you do have any questions whatsoever as regards to this current setup, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever as we get prepared to move into the next financial asset on our watch list. You can as well use that time to mark out these levels on your chart. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving right into the next financial asset on our watch list. So the next asset on our watch list for today is the USTech100, and what an interesting position we have here. In fact, market structure we have here on this asset, looking at things from the 1 hour time frame. Now, before we go into the details, as usual, we want to run through how the week started for us in this community and what led to the decisions we made so far this week. Now, at the beginning of this week, in fact, for the first 48 hours of the week, it was more of an indecisive phase. As you will see here, that price was initially confined within the 14,790 and the 14,650 area to emphasize the level of indecision at that point in time. And with this scenario here, we had no choice than to wait for significant signals, which of course would reflect on the chart as either a breakout of the resistance line or the breakdown of the support line for trading opportunities. And of course, we saw what happened here on Tuesday during the New York session. I think about a couple of hours into the New York session, we saw the breakdown retest of the structure, which triggered our first sell position for the week. And in fact, that breakdown took out the buy pressure around that zone, and since then we were selling the US Tech 100 until earlier yesterday morning. And unfortunately, I was not part of the live session yesterday morning, but our deliberation on this chart the previous day was quite explanatory. And if you remember vividly, I talked about what we will be using to guide our trading decisions for the week. And one of the major parameters we said here was this descending trend line identified after connecting the series of lower highs. And of course, this trend line here was helping us to maintain our bearish bias during the course of the week. And we said on Wednesday that if at any point in time price breaks out of this trend line, then this could turn out to be a bullish signal, as a breakout of that trend line will be a signal that the trend line may no longer have the capacity to negate the bullish attempt. And interestingly, during the New York session yesterday, we saw how price did break out, retest the 14,600 area to signal a bullish signal, and I do hope you are able to take advantage of that opportunity. And if you did, you will currently be running with a minimum of 200 pips in profit. And remember, I made mention here on Wednesday that we have multiple levels that we can use to maximize that move, such as the 14,650 if price breaks out of that area, and of course the 14,790, which all of have been broken at this point in time. So well done to you for being on standby to take advantage of this move, and you know how we do it. The next thing we want to be doing right now, whenever price action moves significantly well in our favor, we want to be moving our stop losses to secure this current positions. And if you look at the way things are going right now, and based on this current structure, I will be suggesting that anywhere between the 14,750 and the 14,695 seems most appropriate to lock in all buy positions in this market. Remember that we are going to be given enough room for price action to breathe, just in case there could be some retracement phases before that uptrend continuation happens. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? And considering the fact that today is the last trading day of the week, are we likely going to be seeing? I think I just lost my network. Is it? Can you still hear me over there? Let's see what we have here. Give me a moment, please. Let me sort this out quickly so that hello everyone. I'm sorry about the breaking transmission. I had some network issues, so I had to switch my router so that we can continue here. Not again. Hold on a second. All right, welcome back, everyone. I'm sorry for the breaking transmission. Like I was saying earlier, I had an internet reception glitch, so I had to switch my router so that we can be back again. So thank you for holding on. So like we were saying earlier, we were talking about how we took advantage of the USTech100 buy opportunity. And I also mentioned that we should be moving our stop losses to secure the current buy positions while we continue to look out for more trading opportunities. And I was begging a question here that are we likely going to be seeing an uptrend scenario today, or are there chances that sellers could come on to take over the market anytime soon? Now, before we go into the details here, I would like us to run through the higher time frame. Let's look at things from an holistic standpoint. What has really been going on in this market since the beginning of the week? Then use that information to make a well informed trading decisions. Now, on the higher time frame, if for those who are with me at the beginning of the week, you would remember that we identified a couple of parameters which we said we were going to be using to guide our independent trading decision, and one of them is this ascending trend line, which buttresses the strength of the buyers in this market since the beginning of this year. Now, in addition to that trend line is this demand zone situated at the 14,650, and in fact this zone here has been persistent with buy pressure in the last June, July, August, and September, the last 4 months in this market. Now, if you see, if when price comes into this area, you saw how sellers had no chance. We saw what happened here again in the month of June, late in the month of June. Fast forward to the month of August, the same thing happened. As we saw, as soon as price got into the zone, sellers struggled and buyers took over the market to push price to the upside. Now, despite the breakdown of that ascending trend line here, which of course is a bearish signal, we can see that as soon as price got into that demand zone again, and since the later part of last week this week, we have seen that sellers have continued to struggle as soon as price gets into the 14,650. So it appears that majority of participants in this market are finding the price at the 14,650 cheap enough to buy the USTech100. And if we consider the continued buy pressure here and the fact that we are within the buyer's territory, it makes quite a lot of sense to look out for buying opportunities at this juncture. Now, to position ourselves for today's trading session, we shall be running through the 1 hour time frame where we want to see what is really going on within this demand zone since the beginning of the week, and let us mark out a level that we will be using to guide our buying decisions. Now, scaling back down into the 1 hour time frame, we have a level which we are going to be using to guide our decisions for today, and that is the $14,790 area. Remember, this is the highest point price action was during the first half of the week. As you will see here, selling pressure. We saw what happened here on Monday, selling pressure again. On Tuesday, we saw selling pressure here. And during the course of yesterday's trading session, we saw another selling pressure around this area. So it's a clear sign that buyers have been struggling to break through that area. And it also tells us how strong the sellers are at this point in time. Now, for us to start considering buying, we will need price action to take out all the sell positions within that level, break out, retest of that structure to give us a beautiful opportunity to join an uptrend continuation. Now, with this scenario here, if you look at what has been going on here, let me zoom right in. If we look at what has been going on here in the last 4 hours now, price appeared to have finally broken out of that structure, taking out the sell positions there. So at this juncture, it makes quite a lot of sense to start looking out for more buying opportunity. And if you are taking advantage of this breakout, well done to you. Let's see if the market will still come back to retest structure to incite more opportunities here. Then I also have a level identified at the, hold on a second, at the 14,850 zone, another psychological area considering the round figure of that price. So we shall be marking out this level here, 14,850. Okay, so we will be looking forward to another breakout retest of that structure to welcome more buy positions in this market. So I remain bullish here. Remember, we are still within a very strong demand zone, which we identified on the higher time frame. And if price continues to remain above this 14,790, it makes quite a lot of sense to hold on to a bullish bias. So that is how we are going to be maximizing the potential of this bullish move at this point. Now, in as much as we look out for buying opportunity, as you all know, we also want to take into consideration the potentials of the sellers. But at this point in time, I'm not confident that sellers will take over this market anytime soon. But if they are going to be doing that, what is it that we would like to see on the chart that will make us want to feel comfortable selling? Well, like I said earlier, this area here had been a strong selling niche since the beginning of this week. Then I would rather want to see price action drop that down below that area, and then with signs that buyers are finding it difficult to climb back above that structure. And one of the things we are going to be seeing here that will confirm that sellers are getting stronger is for price to drop below the structure and continue selling pressure below this area on the lower time frame, and this will be a sign that buyers are losing that steam. Then we could join the crash, which could probably be an attempt to retest the descending trend line that was broken yesterday. So let's see what's going to be happening today. So we are going to be on standby for both opportunities and remain patient to allow those structures to mature before jumping into any positions. So these are my views here on the USTech100. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, while you can also use that time to mark out these levels on your chart. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So permit me to move right into the next financial asset on our watch list for today. So the next asset on our watch list today is the XAUUSD, my favorite, popularly known as the gold spot. And like I said earlier today, well, first of all, the XAUUSD has been tremendously successful. The positions we had were very, very successful this week, and I can say that the XAUUSD happens to be the most successful trade we took so far this week, as we had about a minimum of 7 positions running, and this profit was running into about over close to 2,000 pips in profit on this asset. And for those who took advantage of this opportunity, well done, well done, well done to you for being on standby to capitalize on this move. As personally, I had my TP target hit yesterday at around the $1,860 area. Now let's look at how the week started for us here and what led to the idea of selling this asset. Remember, the dollar was just gaining traction throughout the course of the week, and coupled with positive economic data, it didn't help the gold at all, as capital kept flowing from the safe haven into the US dollar. Now, at the beginning of the week, it was a simple setup we noticed here when we saw price confined within a range between the $1,926.50 level and the $1,922.75 area, giving us a level of indecision at that particular point in time. And of course, you know that when price action falls into such a range, we have no other choice than to remain patient, waiting for a signal to come, either in the form of the breakout of the structure or the breakdown of the support line to give us an opportunity to trade. And interestingly enough, we saw how it became difficult for buyers to even break out, retest that resistance line, hereby shifting the buyers more into the bearish expectation. And of course, we saw price break down the $1,922.75 level that was on Monday, and since that moment, we have been selling the XAUUSD. Then we went on to add more sell positions at the breakdown of structures like the 1915, as you will see right here. We added more positions at the breakdown of that structure. We had more positions at the breakdown of the 1913. We added more at the breakdown of the 1910, and then we also added one more at the 1900 area. All those levels we projected prior to them happening, and I do hope that all of us took advantage of all of these opportunities. So you can see it was quite an interesting 96 hours for us on the XAUUSD, and congratulations to everyone who has been part of this profitable journey. Now, with the way things are going right now, and considering the fact that today is the last trading day of the week, which is always peculiar with profit-taking activities, as majority of the key players in the market who had held on to a particular position or a particular direction throughout the course of the week would likely want to be doing some profit-taking activity, rounding off on their positions as we get nearer to the weekend. And as a result of these expectations, there are chances that we might likely be seeing buy pressure resume or a reversal setup unfold on the chart to give us an insight that price is likely going to the upside. Now, considering the US dollar, I made mention earlier that the US dollar across all the major pairs have been struggling to find demand since today's trading session began, after registering losses against its major rivals on Thursday's trading session. Now, as we look forward to some key events today, I think we have the Harmonized Index of Consumer Prices. It's an inflation data. Oh, that's from the euro, I guess. And then we also have the Personal Consumption Expenditure Price Index from the US Economic Docket. And this is a key determinant that the Fed normally use to gauge inflation figures from the US. So this is going to be an event that's going to be watched during the course of today, and of course the anticipation of the event will be reflecting on the chart as price action. Now let's look at the current structure from a technical standpoint. What is it that is going on in this market? Now, the first thing you would observe here is that as soon as price tested the 18,058 level, which happens to be the lowest point price action has been for this week. Let me mark that level out so that we can have a visual representation on the chart. So we have the 1,858 level duly marked out. This is the lowest point price action has been for this week. And what we saw here was that as soon as price tested that area, we saw a sharp rejection, giving us a hammer sort of candle look-alike, which from a technical standpoint is a significant signal that reveals the presence of buyers around the zone. And one interesting thing about following that hammer candle is the fact that price action transitioned into forming higher lows. And when we begin to see higher lows on the current market structure, it's a clear sign that buyers are gradually gaining momentum behind the scenes. And immediately we notice higher lows, the next thing we normally do is to connect the series of higher lows here to give us a trend line to work with. And as long as price remains above the trend line, we shall feel comfortable with the buy position, with a buy position if we are in any. Now let's go back into the candle chart. Now you can see what is going on here. We have a trend line, and in fact I can project another one right on top of this level, and then we will be using this to guide our decisions for today. So as long as price remains above this trend line, we shall feel comfortable buying, and it's likely that we could be seeing an uptrend scenario here. So I will be looking forward to buying right now above the 1,874 and of course the 1,878 area if we see a breakout retest of the structure. But one thing here is I wouldn't want you to ignore the possibility of a retracement back into structure before the uptrend scenario happen. And why is that? Now let's look at this closely. Following the impulsive move that happened in the last couple of days here, we saw our price crashed into the zone. We saw it test this area, sharp rejection, came back into the $1,867.50 area, came back into structure, higher low, and what you see here is more of a reversal pattern in the form of a double bottom structure. And one thing we normally do whenever we identify this potential of a reversal pattern, the next thing we want to be doing is to mark out the neckline, which we will be using as a yardstick to guide our trading decisions. Now, interesting enough, we have the neckline situated at the $1,867.50 area, and we saw what happened this morning. Price just broke out of that structure, which for me at this juncture is a sign that we might likely be seeing a reversal setup anytime soon. Now, with the way things are going right now, we cannot ignore the potential that price could still come back, retest the neckline of that reversal pattern to incite that uptrend continuation. So let's keep this in mind. Mark out these levels on our chart. So what we are doing right now is to have these levels here. We have the 1,874. A breakout retest welcomes buying opportunity. A breakout retest of the 1,878 welcomes more opportunity. And if instead price retraces back into the neckline at the $1,867.50 area, then we want to look out for buying pressure on our lower time frame there to join an uptrend move. So this is how we are going to be buying the XAUUSD today. So as long as price remains above that neckline at the $1,867.50 area, we continue to hold on to a bullish bias today. So I do hope that we be on standby so that we can capitalize on this move. And for those who are already in the buy positions, well done to you for being on standby to capitalize on that move. So that is that on buying the XAUUSD. Now let us talk about the potentials of sellers. Well, it is very vivid here that price has been bearish throughout the course of the week, and we cannot just ignore the potential that sellers could still come in just because we have a reversal pattern. Now, how do we intend to capitalize on the bearish momentum if ever price action will begin to find lower lows and lower highs? Well, personally, I will be advising us to use this ascending trend line we just plotted here as a yardstick to join a bearish momentum. And how are we going to be using it? Now, the first thing I'll be advising us to do here is to see price break down that ascending trend line to give us a signal that price is likely going bearish. And remember, we are not getting too excited. We are not having a sell stop order there yet, as we will need some confirmations before we jump into that sell position. And to do that, we will scale down immediately. Price action break down the structure. We scale down into our lower time frame, like the 5, 10 or 15 minutes time frame, to look out for signs that buyers are finding it difficult to break back above the ascending trend line. And this, of course, would reflect on the chart as price retesting the trend line or the $1,867.50 level, where continued selling pressure here will welcome selling opportunities. And of course, a further breakdown of the 1,858 will be welcoming more sell positions at this point in time. But the way things are going right now, personally, my instinct tells me that it's going to be bullish. But if price at any point in time breaks down, retest that ascending trend line, then let's get ready to sell, because the market is the dictator right here. So that is that on the XAUUSD. So I encourage you to mark out these levels so that you can use them as a reference point to guide your independent trading decisions. And if you have any questions whatsoever as regards to this current setup or as regards to my explanation so far, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So in the next 10 to 15 seconds, I will be taking some time off to see if you have any questions, while you also use that time to mark out these levels on your chart. All right. So I see your comment, guys. Marketer says hi. 90414472 says hi too. 746833888356. I see your comment too. Thank you for checking in. T Tiger 20. Thank you for checking in. So, in the absence of no questions, I want to assume that we are all on the same page. So, in that regard, we shall be moving right into the last financial asset on our watch list for today. So the next asset on our watch list for today is the USDJPY, and finally yesterday we were taken out of our buy positions, all our buy positions. Remember, we have been buying this asset since the beginning of this week. Now let's run through how the week started for us in this community and what led to the idea of buying this asset, and also what gave us the instinct of adding more buy position to maximize the potential of that bullish move. Now look at the structure. We had our key level for the week, which was situated around the 148.500, a level which was initially a strong barrier for buyers at some point in time during the course of this week, as we saw how sellers continued to negate all attempt by the buyers to break out of that structure. Now, besides the key level here was the fact that price was confined within a range during the first 12 hours of the week, as you will see here, between the 148.500 and the 148.260 to give us an insight into the level of indecision at that point in time. And of course, you know how we do it in this community. When price falls into such a range, we want to exercise patience, waiting for either the breakdown of the support line for selling opportunities or the breakout of the resistance line for buying opportunities. And interestingly, we saw price break out of the resistance line, triggering our buy stop order to give us our first buy position for the week. And since that moment, we have been buying this asset. Remember, we also had multiple levels to maximize this move, such as the 14,930. We also had the 148.930 and the 149.150 level, all of which we used to maximize the potential of this bullish move. And well done to everyone who had taken advantage of these opportunities. Now, during the course of the week, we had a couple of more parameters which we said we were going to be using to guide our decisions, and that was this ascending trend line we spotted here after connecting the series of higher lows. And one of the things we agreed during a couple of days ago was that as long as price remains above this ascending trend line, we shall feel comfortable in our buy positions, while we also look out for more opportunities to buy. And that the only condition that will make us want to sell here is for price action to breach that trend line, break it to the downside. Then we can start thinking of selling. And if you look at what happened during the early hours of today, we saw that sharp decline breaking down that support line. In fact, I missed out on this opportunity actually, as I was still asleep when this whole scenario happened. So we already have a breakdown of the ascending trend line, which is a beautiful signal that we might likely be seeing a bearish momentum. But we are not going to be jumping into conclusions here, as we still have other parameters on this current market structure that will tell us what really is going on here. Now, Besides the breakdown of the ascending trend line, there is one more thing I would like to share with you, and that is around that key level at the 148.500. So this was our key level at the beginning of the week, and remember how we use our key level in this community. As long as price remains above that key level, we want to continue to look out for patterns and structures that support the idea of buying. Now, one thing we saw at the beginning of the week was a first time breakout of the 148.500, and from a technical standpoint, when price breaks out of a key structure such as the 148.500 in this case scenario, there are chances that price could still come back to retest that structure, like a retracement phase, which could be as a result of profit taking activities in the market, where price will come back, retest the structure, and interestingly, that structure also lines up with that ascending trend line we identified on the higher time frame to incite an uptrend scenario. However, if you look at what happened after the breakdown of that ascending trend line just right here this morning, you will see that we saw a sharp rejection of the zone around the 148.550 level, which sits just exactly above our key level to give us a signal that buy pressure is resuming there. But one thing here is that following the breakdown of this ascending trend line, there are chances that price is probably going to be retesting the structure, like continued selling pressure below that ascending trend line or the 149.150 to incite a downtrend, where a further breakdown of our key level at the 148.500 could incite a sell-off in this particular market. Now, so we are in a limbo right now, and what we need to do here is to exercise a lot of patience, and let's see how the market is going to be reacting to this zone, which lines up with both the ascending trend line and the 149.150. So this is where our center of focus is going to be for today, and we shall remain patient to see how the market will react to the structure. Now, one of the things we are going to be doing here is to take into consideration the potentials of both the buyers and the sellers, and what structures we will be using to guide these decisions. Now, let's talk about the potentials of the sellers after considering this impulsive move that broke down this ascending trend line. Now, with the way things are going right now, we have a breakdown of both the ascending trend line and the 149.150. So if price action does come back into the structure, which appears to have happened in the last 3 hours, and we start seeing continued selling pressure around this area, transition into any form of reversal pattern, we want to be getting ready to sell. So continued selling pressure below this ascending trend line or around the 149.150 is a clear sign that buyers are finding it difficult to climb back above that ascending trend line. Now, if instead what happens here is a breakout of the ascending trend line and the 149.150, then this could be a beautiful signal to join an uptrend scenario. But what you want to be doing here is to wait for confirmation. So as soon as we have the breakout of either the 149.150 or the ascending trend line, we scale down into our lower time frame, such as the 10, 5, or 15 minutes time frame, to look out for retest of structure, continue buy pressure around that area, and signs that sellers are finding it difficult to drop back below the 149.150, then this will be a beautiful opportunity to join an uptrend continuation. So you can see how crucial that area between the 149.350 and the 149.150 is. So let's be on standby. Let's see how the market will react to this area. In fact, it could take about 2 to 3 hours before the setup matures. So patience is hereby required here. Now, if for the buy position here, if price continues to break out structures like the 149.450 and the 149.650, which happens to be the highest point price action has been for this week, a breakout of these levels will be welcoming more buy positions. So let's see how the market will play out here. So we have a simple setup. So you do want to be marking this out on your chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And it's on this note I would like to call it a day here, but I will just give the next 10 to 15 seconds to see if there are any questions as regards all the assets we've talked about today before we draw the curtain for today. I see your comments, 5871930. Hello. All right. Hello to you, and I wish you a wonderful weekend. So, in the absence of no questions, I want to assume we are all on the same page. And in fact, it has been quite a phenomenal week for us on the Extreme Speed Live as we capitalize on the strength of the dollar this week and rode that wave all the way into where we are today. And once again, congratulations, kudos to everyone who has been part of this profitable journey. So let's see how the market is going to play out today, and let's see if we can replicate what we did so far this week. And I also mentioned how important Fridays are, as we are likely going to be seeing some profit taking activities which could incite momentum against the prior leading price action. So let's ensure that our setups were get mature before we jump into any positions. So for today, for this week and for today, we were able to attend to 4 major assets, which includes the USOILSPOT, the USTech100, which is popularly known as the Nasdaq. We also attended to the XAUUSD, popularly known as the Gold Spot, and of course the USDJPY, all of which we were able to identify simple setups that will enable us take advantage of potential trading opportunities. So I do hope you are able to mark out these levels on the chart, as you will be needing them as a reference point to guide your independent trading decisions. And for those who are joining us for the first time today, I do hope you are able to gain 1 or 2 things from what we discussed here. And in fact, I encourage you to be part of our subsequent editions, as the more times you spend with us, the better you get in understanding how this works, and eventually be able to use this information to make your own independent trading decisions. So on this note, I wish us all the best of luck today and a wonderful and beautiful weekend. Do have a wonderful evening, everyone. Bye bye.